Our next guest warned that the commercial real estate market was on the verge of collapse. I am, of course, talking about Tom Barrack. He's the CEO of Colony Capital. Back with us. Tom, good morning to you in California.
Morning, Eric. Great to be with you.
Tom, as I said, a month ago, you warned that the commercial real estate market was on the verge of collapse. You called for government intervention and bank intervention to prevent an economic catastrophe. That was a month ago. Where are we now?
Well, I mean, where are we now is the continuum of Groundhog Day. And I think the government has done a great job, right? The response of Steve Mnuchin, Jay Powell, Congress, the administration in addressing the package of tapestries that need to be connected was amazing. I mean, they did in 18 days what took us 18 months in 2008.
Does that mean the market is no longer on the verge of collapse?
No, not at all. I think when we talk about collapse, we're talking about three separate things. We're talking about the financial system that supports the real estate market, which is an institutional banking support system, a shadow banking system, and individual investors all over the world that are buying bonds. And that system is delicate, it's frayed, it relies on one thing, cash flow. So when cash flow stops, you have a problem. And the rule of law traditionally in North America has been if the cash flow stops and you are a debtor, there is a recourse system, a legal system, which will protect the lender. If you're a landlord and renters don't pay, there's a legal system which protects the landlord. All those options are out the window. So we're in a bit in chaos, and supporting the liquidity programs in this interim of cessation of revenue is the quest. We haven't had a crisis like this. It's a crisis like all crises, but we've never had one where we just have a government taking a revenue.
So
complicated.
How would you describe the situation, Tom? How bad is it now? How bad is it likely to get?
I think it depends on the answer to the question, how soon do we get to work, right? Which is politically far beyond my job description. But if America can go back to work in waves responsibly and start creating income in some of these tranches, tranches being everything, right? If you took the real estate world, you take the best today being technology and digital, so radio cell towers, data storage, fiber optics, public storage doesn't require people and stuff. The worst being retail and hospitality, right, where it's just stopped. If we don't go back to work, if consumers don't start buying, and a big problem we have is this separation between the haves and the have-nots gets worse the longer this goes on as we approach 30 million people out of employment. It could get drastic. Drastic meaning...
Yeah, what does drastic mean? No, please, continue that thought.
So if we look at past crises, and you're too young to remember, but I used to have blonde hair and blue eyes before 1990, which was the RTC, followed by 2007, 2008. And what happens is real estate doesn't go anywhere. It just gets repriced. So capital gets wiped out, right? The holders of equity and the holders of debt and the occupants of places just merely rotate, and the capital structure gets realigned. So who is the beneficiary of the disaster ends up being the little people, not the big people. Because the big people just restructure, whether it's debt, whether it's equity, they restructure. So crisis is in the housing market, which is supported by Fannie and Freddie and a very fluid commercial mortgage system. So banks don't want to hold residential mortgages. They originate those mortgages, they package them in tranches of securities, and they sell them to bonds all over the world as AAA rated instruments. And that's what keeps the mortgage market going. So for most of the $33 trillion in North American residential, we've lived the Goldilocks era. right? For 10 years, since 2010, it's been 46% home price appreciation. It's gone. So is the desire to have new home starts in municipalities, in states, which are on the verge themselves of bankruptcy. So it takes time for this tail to catch up. In the commercial mortgage market and the commercial real estate market, the same. People.
So, give us a flavor.
Sorry.
I mean, you're absolutely right, Tom. That's going to take a while to play out. A lot of people are still concerned about what's happening right now. Give us your best sense for what's going to happen on May the 1st, right? Your companies have tenants. What percentage of those tenants are going to make their rent payments?
Less. So I think the answer is in April, it was amazingly good, right? I think to all of us. So if you take from residential to office, retail, and hospitality being the worst, probably down 3 to 5% from normalcy of that period of time. The problem is it's a hope certificate. So people looking at what's happening and saying, I have reserves for a period of time where I can keep going. And what they really need is a timeout, right? It's what we talked about before. What everybody's saying is, why can't I just have a timeout? I need a timeout from paying rent. I need a timeout from paying interest. I need a forbearance. Tack it on to the end. When the government allows me to go back to work, when things go back to normal, then allow me to pay. And that's not happening because of the complexity of the regulatory system.
Sure, that's not happening to them, but it's not happening to you really either, is it? Is there any way, so some of those people can avail themselves of some of the government support that's available, maybe? Can you? Are there any federal programs that Colony can take advantage of? And if you could, would you?
Look, that's a great question. And I think the federal programs that have been instituted are sensational and a great first step. And the answer is no. There's PPP and Main Street are great programs. They're difficult to utilize for companies such as ours, and it's really a bandage on the wound, right? So it's to support an employment base. And no, we're not using those. We're encouraging many of our borrowers and our users to rely on whatever subsidies they can get to continue to make their payments. We're trying to provide workouts and forbearances to the people who need them. But the system is intricate because on top of that, we have shareholders, we have bondholders, we have banks like every other company. So what I had hoped and what most businesses hope, which is an impossible task to put in place quickly, is that timeout, is a broad forbearance. And you see it happening in the residential market. In other words, to punish the little people. Let's forget about the big people. The big companies are going to survive. Colony has plenty of liquidity. It can manage through this process. It will help its borrowers. It will help its renters. It will help its occupants. But the people who get crushed are the people who own the equity, the people who own bonds and debt, the pensioners. Most of this securitized debt across the commercial and residential markets are owned by mutual funds, by ETFs, by insurance companies, by 401k plans. And at the end of the day, the government is going to have to step in and subsidize it all if people don't go back to work, right? It's not a matter of are there going to be more stimulus programs. You could get stimulus up to 10 trillion. When people start looking at the ramifications of business by business, which is dangerous, right? Big brother and government getting into the middle of all these businesses, everybody wants it when they want it, and then when it's done, they say, well, what are you doing in my business? This is the consequence of what we're going to have to deal with. And Congress is doing a good job of trying to limit each other, both Democrats and Republicans, from saying, let's put partisan politics aside, let's think of policies. And of course, the aftermath is something we have to think of, but right now we have to save the patient. And it's going to be complicated. There's going to be a lot of turmoil. There's going to be a lot of agony, and it's going to be fits and starts. This market isn't going to recover fast. It will recover, but not fast.